Thank you very much, Corinna, for the very warm welcome. Fantastic to have you with us today, Piero. Fantastic that we are able to talk about the future of the European payment landscape. And the European Central Bank is not only responsible for price stability in the Eurozone, it's a major payment infrastructure provider in Europe. And you are in particular responsible for two very innovative projects, the preparation and the introduction of the digital euro for retail payments, and also the preparation and introduction of digital central bank money on wholesale payments. We intend to talk about both in the remaining roughly 20 minutes. And let us start on the retail side, Piero. Right? We are living in great uncertainty, new technologies arriving, geopolitical conflicts, also challenges in the economic productivity in Europe. How do you see the status quo of the European payment landscape, and what is the case for change? Why should we further develop it?
Thank you. First of all, thank you again for having me today. I would split the answer in three topics, right? When we talk about the European payment landscape, I see three topics. One is the obvious one, the retail. One is the wholesale. But no less important is what we call the cross-border. When I say cross-border, I mean something beyond the euro area, because we are the central bank of the euro area. For us, there are no differences around countries. So when we speak about cross-border, we mean beyond. Now, on these last two, the wholesale and cross-border, situation looks good. We are in control of the infrastructure. Target 2 securities work pretty well. We have just implemented the ECMS, so the machine is working pretty well. On the cross-border side, we also could be, satisfied. Today, almost 40% of the world trading is invoiced in euro. Well, you could say 20, depending whether you include the trade within the euro area or not. But anyway, the situation does not look dramatic. Still, you said, right, the world is changing very fast. So we need to be careful and we cannot be complacent. We need to understand how the world is changing and how this is going to impact on our infrastructure and the way we provide money to the economy. That's why we are working on the wholesale to provide new ways to make sure that we will be able to provide liquidity to the market which are moving into a new dimension, and also on the cross-border side we are working to expand the possibility for European companies to pay instantly across the world. Where the situation is really difficult, let me put it this way, is on the retail side. This is a very long story. Our market is still very fragmented, and we need to act. We need to act because every day our dependency from non-European providers is getting deeper. And it's not just the amount of the fees that we pay to other non-European providers. To me, what is more concerning is the fact that we are not in control of our own infrastructure. And just to understand the implication of this, in the AI session, Jürgen was speaking about the importance of data. Data are essential for banks to pursue their goals. Now think about the data in payments. When we deal with the non-European card scheme, maybe we lose just some fees. When you deal with the XPay, which are spreading around Europe, we don't just lose fees, we lose data. So if the business of the retail payments business exit the banks, These are profound implications. So we need to make sure that our bank, our PSPs, European PSP, stays at the center of the payment business. Again, it's not just a matter of fee, it's a matter of ownership of infrastructure, it's a matter of data, and therefore the ability to use the new technology to take advantage of those data. That's why we need to stop. Let me say one final thing. This is not a matter of protectionism. It's a matter of investing on our future. Payments are at the crossroad of finance and technology. So in some sense, since both are changing, this is an opportunity for us to leapfrogging and become leaders in the world on this field.
Yeah. Thank you, Piero. And I fully understand the argument of staying in control. At the end, it's very important, in my opinion, that the consumer and the merchants are also using the digital euro, right? And what are the benefits that you see for the consumers? What are the benefits that you see for the merchants? Or let me be a little bit more provocative, given that we have already many payment instruments out there in Europe, right? Is the digital euro, is there a risk that the digital euro is a solution looking for the problem?
Yeah. No, those are serious concerns. We never dismiss that. So let me start from your second point. And there are two issues there. Right? Is a solution in search of a problem. Let's start from the problem. Do we all agree that we have a problem in Europe? By now, I think we all agree. I mean, I don't want to... But at the ECB, we have been speaking about this problem for a while, and now, finally, it seems that we all recognize the problem. So the problem is there. The question is, how do we address this problem? And to me, the fundamental question is not whether there is a competition between the private and public sector in this. To me, the fundamental question is, given the ambition and which we have been pushing of the private sector to scale up at the European level, again, we are very supportive of those initiatives, and this is not my word. There are written documents which we have been producing for many years. So the fundamental question is the ambition of the private sector to scale up the European problem are better served with or without the digital euro. That's, to me, the fundamental question. The probability to make it a higher or lower with or without the digital euro. To me, to us, when I say us, obviously I mean the ECB and the euro system, the digital euro will support the ambition of the private sector to scale up. Today, private sector, to cover those use cases that they cannot cover, rely on some sort of alliance with non-Europeans. This alliance does not come for free. Cost fees, cost data, as I was saying. Tomorrow, with the digital euro, this private sector can make an alliance with the digital euro and use the digital euro to serve the use cases they are not able to cover today. Then they may be able... So the digital euro would make financially stronger the European providers. Second, when you want, if the private sector wants to expand beyond the current use case they cover, they need to rely on non-European standards. The digital euro, because it's a legal tender, will be accepted by all merchants in Europe. So we need to define a standard. And the standard is there for everyone to use. So the private sector could, if they want, nobody is obliged, use this channel, this standard to expand immediately at the European level. So to make a long story short, my feeling is that we could do much better if we join forces there is a clear case of synergy to reach the goal we want to reach, which is our being more independent and strategically more resilient. As for consumer and merchants, the case is pretty obvious. I mean, they've been very vocal. They said, we save money with the digital euro and with the European solution. For consumers, I think that simplicity is the answer. Everyone can pay everywhere in Europe with a single piece of hardware. And again, but let me say one thing on this, right? We are not in the business of convincing people to use one or another piece of hardware or solution. That's for people to choose. What is important for us is that the people can choose. That's very important.
Understood. Yeah. We have talked about consumers, we have talked about merchants. We do also have many bank representatives in the audience today. So how do the banks have to prepare for that? When is the right timing? How much will it cost for commercial banks to implement all that? Yeah. And is there also a benefit for them in that?
So I already alluded to a couple of advantages for banks, right? The banks have to, according to the legislation, I'll say something more about that. The banks have to provide the digital euro services to their clients. Now, how they will do that is still unclear because we don't have the legislation in place, so we don't know exactly. There are different positions. Hopefully, this ambiguity will be solved soon, and this speaks about why do we need soon a legislation in place. So the banks have to provide these services to their clients. They have been floating around all sorts of numbers of how much does it cost. We have seen a study saying 18 billions. Could reach up to 30 billions. So we looked a little bit into that. We have published our report, so I'm not revealing any secret. Our estimate is that could be between 4 and 6 billion in 4 years. This is not a huge cost to.
Very good.
But this is not, banks will be compensated for the services that they provide to the digital euro. And for the reason I was explaining before, we think our estimate is that banks will make money whenever they replace a transaction that is done through international card scheme with the digital euro. So there is a big importance. But again, don't forget the importance of the bank retaining the client relationship. This is key for their business. Through the digital euro, in partnership with the private sector, they will retain the relation with their clients and the data of their clients.
Very good. Let me conclude maybe with one question on the wholesale side. Yeah, we have roughly 3 to 5 minutes left. You're also working to provide digital central bank money to enable atomic settlement in central bank money. Yeah? And we have seen over the last 18 to 24 months stable coins emerging with significant speed into the market. Yeah? So my question is the way you are doing it and also the speed the right one, or a bit provocative, will then at the very end the digital central bank money be a bit too late to the party at the end? Yeah?
Okay. On the wholesale, I don't know whether we are late. The news is that we are going live Q3 2026, so it's not that far away. And we will be able to, banks will be able to pay for the transaction of their clients are making on DLT in central bank money as Q3 2026. I'm not sure that there are other solutions as ready, and this is central bank money, which has some advantage, being the fact that it's the safe asset, so doesn't have any credit risk associated to that, with no fragmented liquidity. because that's central bank money, so there is a kind of business interoperability that you can get when you use central bank money. If you use stable coins, still you have to figure out how to do the cross-ledger transaction. But I'm getting too technical. Let me say something. Stable coins like tokenized deposit, which we think we should reflect on a little bit more, it's another way to mobilize private money. And this is nothing new. I mean, there have been a coexistence of this solution for many years. In the future, we might see this coexistence as well. So we need to get ready to address on a new technological platform an old problem, which is the coexistence in a safe way of private and public money to serve the needs of the economy.
Thank you very much. Thank you for sharing your perspectives on the future of the European payment landscape. I'm sure we could go on a little bit further, but we have to stick also to the time plan and the agenda of the conference. And then let me say arrivederci, Piero, and a big applause from Frankfurt for you. Thank you very much for coming.
Thank you. Thank you.